Welcome to Making Money. This is Matt McCall. Thanks for joining me. It's June 8th, 2023. It's a Thursday. Got one of my colleagues coming on as a guest today, Greg Diamond. He's the editor of 10 Stock Trader. And I got to tell you, this guy over the last 2 years, I don't know if there's anybody out there in the business that's had a better track record than him. Out of all the volatility we've had, the ups, the downs, the sideways, interest rates going up, starting to, maybe kind of pause, inflation going through the roof. This guy's been nailing it, and especially the last couple of weeks here, nailing this rally in AI and in the semiconductors. So we're bringing up right now Greg Diamond, editor of the 10 Stock Trader. Over 1 million people around the world follow Wall Street veteran Mark Chaikin for his shockingly accurate stock market predictions. He just gave them a dire warning. Mark says we're about to witness an historic stock market shakeup that can soon create devastating losses for investors who don't know what's coming. And as a result, you only have 90 days to move your money. You see, Mark spent 50 years on Wall Street at some of the most prestigious hedge funds in history. And he's been on Fox Business and CNBC countless times. But this is a financial story no one else is telling. And if you let this take you by surprise, you could be in for a world of pain. He explains everything in a brand new free report available at rollingcrash2023.com. He includes a name and ticker of a popular stock that could be directly impacted by what's happening as well. Mark warned of the beloved pet brand Chewy before it fell 45%. Tech company C Limited before it fell 66%. Furniture company Wayfair before it fell 76%. Social media favorite Snap before it fell 36%. And food delivery company DoorDash before it fell 65%. Mark even called the Amazon crash before the FANG stock fell 35%. So you'll want to avoid the stock in this new report immediately. Again, simply go to rollingcrash2023.com for your free copy of this new report. So here he is, Greg Diamond. Greg, thanks so much for joining the show for the first time.
Yeah, great to be on here, Matt.
All right, so you've had a hell of a track record, not just this year, last year, and you've been playing both sides of the market, and you've been right. And we've had a market that switched trends a few times, but obviously since October, really, we've been in pretty much an uptrend. Just kind of get your big picture view right now, Greg, of how you see the overall markets. I know you're shorter term from time to time, but you still have a big, picture, the big view. Do you think this current rally we've seen stocks will continue through the year?
I do. I actually think that we'll see the NASDAQ make a new all-time high by, call it January, February of 2024. We've already seen stocks like NVIDIA make a new all-time high above the 2022 high before the inflation, Ukraine-Russia war crash, if you will. Apple, same thing. Artificial intelligence, technology, it's really leading the market, and then last week, finally, we saw, a solid jobs number, and then we saw, the index like the Dow and S&P start to move higher as well. So that was encouraging for me because, as a technical trader, I like to see confirmation when everything is kind of moving in the same direction. For a while there, we kind of went sideways. So to see that big push has me more bullish, especially now there's so many bears out there still. So to me, that's what's going to hurt the most people, and that's why I like being bullish here. So yes, I think the trend continues.
So let me put this point at you. Obviously the big story you see coming across the last couple of weeks is the rallying in NASDAQ this year. The S&P this year has been led by 7 stocks. The rest of the 493 other stocks in the S&P have done nothing, but these 7 stocks have led it. How do you kind of counter that argument?
It's kind of like what I just mentioned. Last week we saw the economy is being more resilient, and so what I think you're starting to see is the old playbook of inflation and the Fed that is falling by the wayside, and the market's starting to reprice. Okay, listen, the COVID crash, if you will, and the interest rate level that we saw at 0 is going to be a generational low for a long time. The Fed got behind the curve. So now stocks with some leading more than others are starting to reprice a higher level of interest rate environment, but not necessarily, the shock that we saw last year. So I think that we're already starting to see, more than just those 7 stocks start to lead, and we saw the indexes last week reflect that. So yeah, you can point that out, but if you tried to short it based on just that, hey, it's only 7 stocks, I'm gonna start shorting it. You're down a lot. So it just the price action doesn't reflect that outlook.
Yeah, I agree with you. It's but I think it's the bears grasping for every little piece of air that they have left out there, just because they're getting walloped, as you said. All three major adversaries breaking out. What about the small caps, Greg? Small caps have been lagging, but they're starting to move as well, and that to me is a really bullish sign. Do you view them? And when you do your trading, do you typically stick to the big guys, or do you look at some of the smaller and mid cap stocks as well?
I look at as much as many stocks as possible. And we actually, just before we popped on, I was looking at small caps. It's interesting that you just mentioned that. And a lot of the regional banks are in that, and that started to move higher. KRE, the regional bank ETF, is up 4% last time I just checked. So we're starting to see again more than just 7 stocks start to really take off and rally. Now, in terms of what I'll trade, I've been looking at IWM, the Russell 2000. I've been looking at KRE. I've been looking at XLF, the banks, but it's just not something that I'm going to be trading right now, simply because I love the way semiconductor stocks are trading. I love the way that even Tesla, the Nasdaq in general. So I'm just sticking with what's really, really moving. But again, as I mentioned earlier, I like to see the confirmation that we're starting to see Russell 2000 kind of bottom and rally here.
Yeah, I'm just looking at the IWM right now, breaking out to almost within a couple of days of a 3-month high, and on some big candles too, closing near the highs of the day. That's a really bullish sign. And this was happening as the semis were pulling back, bouncing today, but they pulled back. So again, you're starting to see this the breakout spreading throughout different sectors. You mentioned KRE this morning, hitting potentially 6-week high here, closing at. This is all really good news. So I back you with all this. And then you mentioned AI earlier. Let's talk about artificial intelligence for a little bit, because obviously it's been a hot topic this year for the most part, especially with tech investing. Again, play devil's advocate. I love AI, but there's a lot of people out there that say this is a bubble. And people I respect say it, that this is no different than 99, 2000, no different than 08. This is just a huge bubble. What do you say to that?
I can't disagree with the bubble aspect of it, but how long is that bubble going to last? So, at what point now? So AI is there's good, there's bad. I don't think anyone can sit here and tell you exactly what the consequences are going to be. There will be consequences, but in terms of the investment, that's just something that I want to ride. And when you talk about AI, something I'll point out is with Tesla, and I'm going to write about it next week, but I'll say it to you and your listeners now. Elon Musk didn't leave Twitter to go and just kind of sit on the bench at Tesla and just I'm just going to hang out and have a good time. It's kind of like when Michael Jordan left for baseball and then came back to the Bulls. He didn't want to just hang out and on the bench score 10 points. He did it for a reason. I mean, you look at those two guys and they come back with that type of drive. It's going to be because something's big. And we look at Tesla, you look at artificial intelligence, you look at what Elon Musk is going to do. I think he's going to change the game there. So, how long that bubble lasts, I'm not exactly sure, but I'm going to ride it for, as long as it does, because right now it's really something special.
Well, also, if you look at long term, I want to get back to Tesla in a minute. I want to talk more about that. But before we jump into Tesla, I look at AI, and I'm going to see if you agree with me, is maybe some of these stocks are in a short-term bubble. They've rallied so much that you can't go up every day. You have to come down. But I still believe in that we're in such early stages of AI that it's changing the world. And everything from vehicles, we're going to talk about in a second, to healthcare, to the way people work. I mean, everything. So when people say it's a bubble, that's to me something that's over. And I don't think it's over. I think it's just beginning. Do we get ahead of ourselves for a few weeks? Yeah, sure. Big deal. So do you kind of that same view, Greg?
100%, and I made the argument last week, looking at advanced micro devices, another, they're working with Microsoft and artificial intelligence. So, how long? Yeah, I like the way you put it. It's going to be involved in everything, every aspect of our life. What are the consequences going forward? At what point does the human life, the human, just being human and not having to rely on robots and everything to do everything for us, that's probably the question down the line. But in terms of the investment, I agree with you. I think we're in the very beginning stages of what this is going to look like. You have this chat GPT, and then it's just going to go from there. What are the regulations going to be? I don't know. But Nvidia is selling their chips for $40,000 a pop. The stock is going,
Yeah.
bonkers. AMD, same thing. ASML. I mean, you look just in everything, cars, but as you mentioned it. So it's and just the price action alone as a technical guy, it's like that's not something I'm just going to fade. So
Yeah.
if I start to see that bubble like activity, you get the Uber driver and he's starting to talk about how he's buying AI chips, then yeah, I think that's probably when you're in the late stage bubble talk, but not right now.
Well, you got to let me know because I'm in Nicaragua for the summer and I don't have any Uber drivers and nobody's talking about anything about AI. So you got to shoot me a text when you hear that.
Right.
I will say just to give you a shout out here, we were sitting next to each other in mid-May, was it? We were in Maryland at
Yep.
an investment conference for our company, and you put out a trade that day. And I remember leaning over your shoulder and saying, "Great job! I love this trade." And I think it was SOXL, if I'm not mistaken, right around $13 or so, maybe around there.
Yep.
And that almost doubled, right? Went to about $25 in what, a month?
A
I mean,
month.
that was a great trade. Yeah. So you were on this AI slash semiconductor trade. Really, you caught that move. So congrats. I mean, I wanted to tell you that because I was literally sitting next to you as you wrote it up, and that was a great trade. Are you still in some trades with the semiconductors now?
Yeah. Advanced Micro Devices, probably one of my favorite stocks to trade, not just now, but since I've been at Stansberry Research. And then you mentioned the Soxel, still in that too. So I'm looking for, as you mentioned earlier, a little bit of a pause. We kind of saw that this week so far. So this is really a matter of waiting this out. There's a little bit of overbought conditions right now, and then I'm going to probably look for something to or look for more opportunities to buy it because as we've been discussing, I think this has a higher leg to run.
All right, so let's go back to Tesla for a minute. I'm a huge Elon Musk fan. I've been for a decade plus. I think he's a genius. I think he's a special person in a lot of different ways. But I think he's, I want to back him. I'd back him in anything he does. So when you talk about him coming back to Tesla, talking about AI, are you referring to autonomous vehicles? How do you see AI working in?
That would be the logical conclusion. I mean, you're just gonna drive yourself. I mean, it's not something that that me personally, I think I want to do or get behind. But the I, he's such an innovative mind, and he just sees into the future to where I don't want to fade that. It's I mentioned the analogy with Michael Jordan. Would you really want to fade Michael Jordan when he came back to the Bulls and won all these championships? No, you don't fade someone like that. So Elon Musk goes back to Tesla. Something big is going to happen. You're seeing that in the price. I mean, it went from 150 to whatever it is today, 215, in a month. And he's talking AI, and I'm with you. I want to get behind him and ride that wave because I think it's going to be a pretty big wave.
What about his trip he took to China? Great. That trip he took to China, we don't have our own government diplomats talking in China, which is ridiculous to me. But he made the move and went over there, and I thought that actually bode very well for the company's stock as well.
Yeah, so I'll give your listeners a little insight just on a technical point of view. I actually think Tesla can hit $800 a share within 3 years. So what and there's a lot of and here's the other thing. I don't really buy into the green energy is actually black energy in terms of fossil fuels. You can't have batteries without fossil fuels. It's just impossible. So it's not necessarily that I'm thinking, or saying here that you have to go out and, get behind batteries, get behind the green energy, movement, if you want to call it that. It has nothing to do with that. It's really about Elon Musk. It's really about the future of what cars are going to be. And, that's something that, again, I don't want to fade. I want to get behind that move.
Yep. Yeah, I agree with you. We've done a lot of writing on my team about green energy for many years, but also we take the barbell approach, and on the other side we own oil stocks. So you can't have green energy without dirty energy, black energy, whatever the hell you want to call it.
Right.
Very much a misconception with people. And there's a report that came out this weekend. I didn't dive into it, so I just read the headlines, but it was talking about how talking about green energy and truly how bad it really is, because it takes so much of minerals that are so terrible getting out of the ground, the mining, how bad it really is, that the net is actually worse in some situations.
I agree, and I'll tell you a quick story. I went to Montana last year with family, and we visited a rancher, a real deal rancher, 10,000 acres. And I was asking him, because they had the wind turbines and everything that you could kind of see in the distance. And he said, I don't think people really understand how bad this actually is for the environment. He's like, it takes a massive 18-wheeler to get just one of these, blades in. They're always working on them. They're always leaking, different fuels and, all types of chemicals and whatever. And then he told me they have these things called wind farm graveyards. So when these things break down, what do? They can't, break down they bury them in the ground, leak, for God knows how long, killing the plants, so everything that you talk about in terms of what it's not supposed to do, it's actually doing, just as bad as, as an oil spill in the ocean or whatever it might be. So I'm in full agreement with you.
Yeah, the problem is we're the silent majority when it comes to this. We're not loud, so our voice isn't really heard when we talk about this stuff like this. But at the end of the day, it's not my view, and I'm sure you invest and trade the same way. It doesn't matter what I think, where my political views go. It's where the momentum's going, where the money's being made.
100%.
At the end of the day,
I say it to my subscribers all the time. The why doesn't matter. The why does not matter. It's really about is the market going to go up? Is it going to go down? And that's what we do as traders, as investors. If you want to focus on the why, that's really going to lead to bias, and bias can get you hurt.
Yep. And that's why, as a former TV host in financial news, not proud of that, but I'm a former one. And I was watching CNBC this morning with the SEC news coming out, going after Coinbase. And I'm not going to mention names, but some people that are pretty famous on in the morning on CNBC. I mean, some of the hypocritical stuff that, like, if I were, say you and I traded that one day, just followed what they said, we would be wrong, because they're telling you to buy when it's up and sell when it's down. They're doing the exact opposite what you should be doing. And it's kind of sad, because there's a lot of individual investors out there that, that are subscribers of us that tune into that and take it for what it's worth. It's really hurtful to the average investor, in my opinion.
I don't watch any business shows. I don't watch, I see headlines, just because it's part of my job. But rarely do I, will go into an article and actually read it, simply because, it kind of goes with what you just said. They're looking for something to talk about, not necessarily understanding, at least from an investment standpoint, their timing couldn't be worse, basically. So I've always learned to just kind of put the TV host off to the side. No offense.
Well, they need whys, right? They need whys, because they can't just tune in and be like, hey, the market was sideways today, tune back in tomorrow. They need whys. They need eyes and whys. So so your T-shirt, we're taping this on Tuesday. We'll go out Thursday, but about an hour and a half ago was breaking news that the PGA Tour and Live Golf are merging, which I find insane. Obviously, you have your PGA shirt on, and for a year and a half, 2 years, the president of PGA, Jay Monahan, was just basically bashing Live, and now he's coming out, and then that's kumbaya. I just did a podcast for Tuesday, and the basis of it, Greg, was people are hypocrites, especially in this industry, a lot of people. But, and then this Live thing comes out, it's just like hypocritical. And people in power seem to get away with whatever the hell they want to do. One day they say one thing, next day different. So coming out to this Coinbase and SEC situation, the SEC in 2019 approves Coinbase to go public. They've been regulating them for almost 4 years now. They know, or they should know, exactly everything that goes on in that business, because they're regulating them. But now they come out and say they've been doing something wrong since 2019. What am I missing here? I know neither of us are Bitcoin experts, but what am I missing here? And is there bigger implications of what's going to happen with the financial markets?
I think there is, and I kind of just go back to history. And so first, my outlook on Bitcoin, Ethereum, all that stuff is I just look at it as a market to trade. The reason I say that is because at no point in the history of human civilization has a government came and said, "Oh, you know what? You have this currency that's just going to give power to you and take it away from us. Yeah, sure, go ahead, go
Yeah.
ahead. We'll go ahead and give that to you. No problem whatsoever. We'll hand over the control of money, all the power, no problem whatsoever." I think you're starting to see that come to now, right?
Yeah.
So it's like, oh yeah, okay, everything. Yeah, you're regulated. Wait. I don't think so. That's not how this is going to work. So, that's kind of where my mindset is. I'll have to look more into it in terms of, what they're actually accusing them of. But, it's Bitcoin is something that I just kind of stayed away from. But you're right. It is hypocritical for them to say, yes, you are regulated. Oops, and now we're gonna sue you.
Yeah, and without creating laws because they can't break a law because they never actually said if it's a security or not. So it's like,
Right.
what the hell? Like, it's you never kind of want to be the first mover in things like that. But I think if anything, though, for the broader markets, obviously it's not affecting the stock market today. You're not seeing that, but we did see Bitcoin do very well during the banking crisis, if you will, the regional banking crisis. We saw a lot of money go into Bitcoin because a lot of people started getting concerned about our financial system. That being said, we talked about this already. KRE, the regional banks hitting a 6-week high today. How do you view the financials here? Do you think the regionals can make a comeback? Do we look at the big guys being the winners, the JP Morgans, the Bank of Americas being the winners of this? Do you have any view on where the financials go?
So I think, I mean, you just said it. People of power get away with whatever that. I mean, Jamie Dimon and J.P. Morgan and Bank of America and these guys, they're definitely going to come out as the winners. There's just going to be more consolidation. It's basically a fire sale for these regional banks who, by the way, their one job or one sole responsibility is to manage their bond portfolio, and they couldn't even do that. So, you kind of got what you asked for by, not understanding interest rates as a banker. It just blows my mind that some of this stuff happened, especially with SVB. I mean, it's just unbelievable. So I really like the setup, both technically and fundamentally, in some of the bigger banks, JP Morgan, especially Bank of America, even a Wells Fargo, which doesn't have the best reputation, but I guess none of these big banks really do. So, I guess the question is how many regional banks are still in trouble that we don't know about? And then, the other risk factor is going to be commercial loans. But, people who want to compare this to 2008, I don't see a comparison at all. You're in 2008, you're talking about unbelievable speculation, fraud. This happens to be, financial mismanagement of their bond portfolio and interest rates. It's totally separate. Furthermore, look what happened in 2008, 2007 to 2009. It was a total contagion. You think NVIDIA, AMD, Apple, they don't care about what's happening in the banking sector because they're taking off. So the comparison to me is just not there.
Good. I'm glad you said that because I agree with you. One topic that's kind of off what we're talking about, but I try to ask most people about it because a lot of our viewers tend to like it, and that's gold, Greg. Do you have a view on gold? And I mean, is that something that you could even trade? Does it move enough for you? I'm just curious what your view is.
Yeah, it does. I've largely stayed away from it this year. Actually, I don't think I've really touched it over the last 2 years. I've had a couple of trades basically, but I really just have been focused more on stocks. In terms, obviously, we can't talk about gold without talking about the dollar and inflation and the Fed. So that's kind of where that correlation comes through. And I mentioned it earlier about this long-term low in interest rates that we've likely seen. How does that reflect in the dollar, and then therefore how does that reflect into gold? Gold has done well. I mean, it has but gold is it's a three-headed monster really in terms of its currency relative to other currencies, especially the dollar, inflation hedge, if you want to call it that, and then uncertainty. So the risk of war, you'll see gold go up, and then so those three factors make it difficult, kind of like 3D chess, trading gold. So I've kind of stayed away from it, but in terms of trading, I mean, there are certain, Royal Gold, RGLD, Franco Nevada. Some of these stocks are fantastic investments. Whether, again, no bias, whether you like gold or not, the price action says, these are really good stocks to hold.
Yeah, it makes sense. I mean, I feel like gold, the tough part of it, it's event driven a lot of times. So you need to kind of know when those events are going to happen, which a lot of times we don't know when those events are going to happen. Before I let you go, is there anything that you're looking at now, and any sectors or trends or anything that we haven't mentioned? I don't want you to give away any of your future trades or anything, but anything that's kind of popping up on your screen?
It's interesting you say that because I just, for the first time in probably 6 months, I started looking at XRT, the retail ETF. And it's actually, to me, looking like it's bottoming here, which would, as we kind of alluded to in the entire discussion, help get everything else moving along. So the things that have been lagging, not necessarily they're going to be leading, but the rising tide is starting to lift all the boats. So XRT is one I'm going to be focused on over the next few months, and then one additional thing that I'll mention is copper and Freeport McMoRan, and FCX is the ticker there. That is usually a good indicator of the economy and how things are doing, and that to me also looks like it's been bottoming. So again, we're starting to see some of these laggers start to pick up and join the semiconductors and technology sectors. So those are two that I like right now.
The copper I find interesting. We recommended a copper stock a little while ago. We're down on it now. It's pulled back in it's only about maybe a 6-week-old investment, and it's a 5 to 6 year play. So it started out not great, but I like copper for many reasons. Going back to the green technology, it's needed, and you look at EVs, how much copper you need in EVs and battery technology. So I think there's huge demand, and I think we'll see a deficit in that years to come. And you start seeing FCX as a good proxy for that, in my opinion, to play the price of copper. Retails, I find that interesting because I started looking at them a little bit, but to me, for retail, it's so company specific.
Yeah.
You look at XRT and what makes it up. I just pulled it up as you were talking. I didn't realize what the top holdings are. Top holdings: Carvana and GameStop, then Amazon, Natural Vision Holdings, Upbound Group, never even heard of, Camping World, Abercrombie and Fitch. So it's a pretty diversified ETF, to say the least. If that's something where you would actually play the sector, would you look for individual stocks potentially breaking out within there?
Personally, I would look at just XRT, the sector.
Okay.
I never got involved with the meme thing with GameStop or AMC or any of that stuff. That was just complete absurdity.
Yeah.
So it's just not something I'm going to play. Again, as a technical trader, I'm just going to not focus on the why or what the other stocks or the fundamental backdrop of what it is. I just want to see, is it going to go up or is it going to go down? How can I make money off of it? So it's just something that's catching my eye right now.
Yeah, the chart looks good. Looks like a nice long-term double bottom forming down there. That's nice. Yep. It's forming that bit of that base. I like that down there. So before I let you go, I always ask every guest what I call the island question, and send you, your family, your friends, whoever the hell you want to go with, to an island for 10 years. You can have one investment before you go. You can't sell it along the way. It could be an index, a stock, a commodity, whatever the hell you want. What's the one investment for long term that you just feel comfortable putting in your portfolio?
Hershey, HSY.
Hershey.
Wow.
Yeah.
So look at a 40-year chart. Ask yourself why you would ever sell it. Look at the dividend yield of the 40 years and ask yourself, it's just an incredible stock. And if you're going to be stuck on an island for 10 years, who wouldn't want a little chocolate?
I was going to say, you got a sweet tooth over there?
I actually don't,
you're the
but
second
it's just
person to say that, though.
Is that right? Oh, okay.
Yeah. Well, we know it's a Stansberry favorite, so it's somebody else.
I mean, even if it's not, I mean, it's just in terms of just an investment. Again, 10 years, not going to trade it. You're just going to own it. You're going to get paid.
Yeah, I grew up in Pennsylvania, so every school year we would take a trip to Hershey, Pennsylvania, and I've been there recently with my niece and nephews. Not the same. I really don't eat chocolate, but There's long lines. I know that, and people love
Right.
it. So that's
Right.
that's a great choice. But hey,
Unless they
great. Hey,
if they get away with if they do away with Halloween and Valentine's Day, it's going to be in trouble. But I don't think it's going to happen anytime soon.
no, if anything, we're creating more BS holidays probably to sell that. So I don't think it's going away anywhere.
Right.
But hey, listen, thanks for coming on, and congrats again on a great track record over the last 2 years, man. You've been crushing it. Keep up the great work. We know your subscribers are happy and proud to be a colleague of yours. And again, keep up the great work, brother.
Likewise, Matt. I really appreciate it having me on. Thank you.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.